he is.
What's up, bro? How are you?
Chilling?
What's up, man?
Hanging there.
What's up, Mike? What's up?
I had 6 drinks before I came, but I didn't get drunk.
Oh, really?
No, he told me not to get drunk.
Might be ready to run.
Let's do it. Where the heck is Levy at? Is this good level? Levy. Yeah. Oh, you gotta put the whatchamacallit on. What? Oh, the logo? Yeah. Why does it keep moving? 3, 2, 1. We good, Mike? Welcome back to the newest episode of Real Estate and Chill Podcast. I'm your host, James Chowdhury, here with Cliff Go Mortgage, here for all your residential financial needs, here with... Damn, it's so freaking low energy, bro. Do it again. All right. It's morning time. Wake up. Ready? Welcome back to the newest episode of the Real Estate and Chill Podcast. What the heck? That's mad low energy, bro. Isn't he have mad low energy?
My energy is probably lower. I'm kind of just going to feed off him.
Welcome back to the newest episode of the Real Estate and Chill Podcast. I'm Mike. Host. Isn't he freaking low energy, bro? It's super low. You're not even turning it up. You got the Cliff Go hat on and everything.
I would just yell.
Welcome back to the newest episode of Real Estate and Chill Podcast. I'm your host, James Chowdhury, here with Cliff Go Mortgage, here for all your residential financial needs. Here with... Bro, I'm not doing it again. Just go. Bro, you have to do it again. Go. Just do it again. Bro, you weren't a freaking Cliff... all right, whatever. Wait. Welcome back to the newest episode. You were at Cardinal, right?
Yes.
Bro, you interviewing your direct lender. You gotta look good, bro. I mean, direct competition. Yeah, I know, but that's why I'm wearing the Cliff Go hat. Yo, why are we even... Wait. Yo, Kevin, bro, why stop. Are we shooting this episode? You're getting me tight. I know you're in the room, Sam, but why are we shooting the episode if you're direct competition, bro? Bro, just run it. Just go. Kevin, you're making it mad awkward. Welcome back to the newest episode of Real Estate and Chill Podcast. I'm your host, James Chowdhury, here with Cliff Go Mortgage, here for all your residential financial needs here. Yo, Kevin, bro, you're getting me tight. Just do it. I don't think it's a good look. Mike, do you think it's a good look? This is like freaking EPM interview and freaking... Damn, bro. Yo, I'm just saying. Why make it awkward? I'm just saying. You wanted to have this interview. I'm just saying. All right. Yo, we're going to do one more take, and then you go. All right? All right, fine. All right. Welcome back. Yo, he's over here like, yo, what is going on?
I had no idea.
Sounds like, yo, you changed it real quick on the camera. Oh, man. Sal! We got the man himself in the building.
That's better than the low-key assassination that I expected.
Yo, Sal, we were just messing around. We had to. We knew you'd be a good sport about it, so we're trying to be like the Nuts Boys on this now.
Oh, of course. No, I enjoyed it. I had a feeling when you guys came in hot and didn't say nothing. Damn, I thought I was gonna be prepped for this. What do you want to talk about? He's like, you know what? Don't matter what you want to talk about. Roll the cameras. Everything's on the table. All right, let's go.
Oh, I love it. All right, nah, man. We had to have some fun. Yo, we're so happy to have you here, bro. This has been long awaited. We love you. We're happy to have you here. Welcome. All right. As you know, we got you a money gun, so you can shoot it whenever it's appropriate. I said that 7 times, Kevin. Please introduce yourself. Kevin Iglesias, Associate Broker. Today, as always, $1 million episode. You break the money gun?
No, I just needed to see what was in it.
They're real. Only real for Sal.
If they were real, I was going to take it with me.
All right, we got the man himself, Sal, in the building. Workaholics, let's go! Welcome.
You guys,
please, Sal, introduce yourself.
So, Sal Rizzolo, Cardinal Financial. I started, I obviously sell mortgages for a living. I run a branch out in Patchogue. A few guys that you guys have probably seen on social media. But other than that, me and James know each other from a long time ago. We both used to walk the halls at United Mortgage.
Yes, I was going to bring that up.
They have clothes that didn't fit us because we weren't ready to spend money we didn't have on clothes that we couldn't afford. So it was definitely cool to see James. We both left, went different ways, and then started seeing each other out at events. And I met Kevin through James, so that was it was cool to be invited on here. This is actually my second podcast ever.
No way.
Yep.
First one, Handsome.
Yep.
Nice. Shout out Handsome Homebuyer.
Charles.
So, how was Workaholics? How was the event?
It was, I mean, you guys would know too because you throw events. So it was definitely nerve wracking. You spend $40,000 and then you sell about 43 tickets until the day of the event.
Yeah, been there.
We sold 120 tickets the day of the event, and we sold 60 tickets the day before. So we ended up at like 220. We raised somewhere between 15 and 20,000. I'm going to try to raise a little more money this week before we announce the final numbers. But yeah, it's, you know, like everything we do, Workaholics was kind of like an accidental idea. And it snowballed into a party, and then same thing with Wintervention, and we've kind of just been running it, opened an LLC, and started a company, the whole nine.
I love that. When you were running Workaholics, like, because I know it's a little bit different than like a traditional networking event, right? It's a little bit different. Tell us what your like goals are, what your aim is like with the event.
So originally we you know, the same thing with you. Like when you throw an event, you reach out to me and you have me come, and we're competitors, but we know the same people. And it's, you know, like I see how the realtors act in this industry, and you guys are all friends. And there's no reason for us not to be friends. We're all selling mortgages, and we're all doing the same thing. So the idea behind the fundraiser was twofold. One, to give back, obviously. It makes more sense. It gets some people off the fence, whether they were going to come or they weren't. They weren't sure. Now they will. And then it gives people a reason to come together. Instead of saying like, oh, well, you know, we're competitors, I can't go there. Well, you know, well, now it's a fundraiser. Now we're raising money. So right. Saying you hate kids, you know, stuff like that, you know. So that was the main reason that we geared it towards raising money, and we invited everyone, and we chose Workaholics Anonymous as the name because we originally raised money for substance abuse and mental health. So we spoofed the you know, an Alcoholics Anonymous meeting. We made it Workaholics, and then we had everybody join in and talk about how much they're working, and we were, because it was, you know, it's 2021, 22, so, you know, we were working 26 hours a day. And we kind of just took it from there.
I kind of want to rewind back, though, because some of our audience may know you, some of them may not. How'd you get into selling mortgages?
So it originally, I mean, I was a barber for 15 years. Most people know that. And I used to cut Frank's hair, and you remember Frank from United too. So when I met Frank wasn't even in the position that I'm in now, right? He was a loan officer, and he had a few people working for him. He moved into management, and then he started working at United. And, you know, I watched him move from you know, broken down car to nice car to house, and I was always trailing behind him. And it was, you know, it was like Wolf of Wall Street. Like, you know, what do you do for a living? And, oh, this is what I do. You know, you show me a check for $72,000, I can work for you today. So it was almost like, he's like, you know, come into the office and check it out. See if you know, let's meet some of the people, see what you think. And when I went into the office, the paperwork was there, and he was like, well, you're part-time now. Just come and go as you please, do what you want. See if you can get anyone from the barbershop to take out a mortgage through you. And that was it. It wasn't an option anymore. Like, if I cut your hair and you still wanted your haircut, I was doing your mortgage, or, you know, you were out on your ass. And that's where it started. It was 1 foot in, 1 foot out. You know, presidential election, we lost refinances overnight. I started doing real estate. I did real estate for a year and a half. I did pretty well my first year because same business. And then eventually at Cardinal, I was given the opportunity to either, you know, keep doing everything or drop everything but mortgages and take on my own branch. And that's when I took on my branch.
I mean, look, I'm not really too familiar with the mortgage field as far as, like, selling-wise, but, like, what was the first mortgage that you, I guess, sold that you were like, you know what, I could do this?
Was it somebody from the barbershop?
Yeah. It was actually a terrible story. It was, without going too far into detail, the guy was supposed to have $15,000 to close. He only had 10. He told me by the end of the transaction he'd have the 15, but he ended up only having 5. Everyone was mad at me. Everyone was freaking out. Frank did what he does and stepped in and made the deal okay, and, you know, patched everything up and dug into his own pocket so that I didn't look stupid. But that was like a quick wake-up call. That was the first purchase that I ever did.
And that's a real leader right there.
Yeah.
Helping you out.
He helped out. I mean, he's seen what I was dealing with, and it was just like I did everything I was supposed to do. The guy, you know, so now I've, you know, that I learned like 6 or 7 lessons from that loan. You know, you can't trust what people say. You gotta do your own due diligence, everything you need up front. So I learned a lot of lessons up front. But
and that he was a barber or he was a client?
He was a client of someone else, of a different barber.
So that was like the first deal. You're like.
That was, yeah, and I started, I mean, right after that, I took off. I was doing like 1 or 2 loans a month consistently, but I was still working 4 days a week at the barbershop and selling real estate and selling DVDs at United. And it was too much. I was working as hard as I am now, but when you're trying to do 4 or 5 different things, it's impossible.
Yeah, it's time
that
for
story you had the other day was hilarious when someone like texted you like 10 years later.
That's a real text.
That was so funny.
And then he was like, "How was I supposed to know?" I'm like, "I don't know, because you can't buy a DVD if you try to anymore." Like, it was one of my dad's friends. So.
Oh, how long? So when did you? What year did you actually get started in the industry? How long have you been in the industry now?
2016, I was licensed. I didn't do any business until I think my first purchase was like mid to end of 2017. And then I didn't have my first $1 million month until 18.
Gotcha. But that's still quick. Like especially in this super competitive. Like Long Island is such a competitive market for lenders, for real estate agents, for everyone. It's just an oversaturated market, and just like doing that quickly, like that's impressive. While having other jobs too, like that's some people who don't even have, who are in the business full time don't even get to that quickly. So,
hey, make sure you check us out at the realestateandchillpodcast.com. Buy your real estate merch now. Real estate merch with swag, a brand for hustlers only. Let's go.
The reason for it was definitely that, like, if I cut your hair or if you sat down in a chair that was within earshot of me, you were talking to me about real estate or mortgages. You didn't have a fucking choice. Yeah. Like 40 minutes in the chair. So like I was digging it into people's heads. I was so excited about it. People that weren't buying houses were talking about buying houses. Yeah. So it was just always, always staying in people's ears and always being the point of reference for something like that.
Staying top of mind when it comes to real estate, basically.
Yeah.
Let me ask you a question. I'm going to ask you guys 2 questions. From the real estate standpoint, right? Because you guys are throwing seminars, we're throwing seminars. Other lenders come to our seminars. Lenders come to your seminars. What do you guys do in that atmosphere, right? Because if I feel like a couple lenders would be walking around like, "Hey, whatever he said to you, I'll do it for a point less.
I'll do it better."
I literally heard like, I'm not trying to feed anybody, but like I literally heard this dude,
because it's just a network full of people, so it's like a bunch of different lenders walking around. It's like, yo,
on your team too. I was literally talking
whatever so and so said to you, I'll do it for a point less.
Yo, literally, when at our event, somebody who was on your team, a lender walked up to him. I just said, "What's up?" I said, "Peace out." He was like, "Oh yeah, I'll do it." He was like, "I know you work with James. Whatever he could do, I'll do better." I was like, "Bro, shut up! Like, just leave. Like, what are you doing?"
That's wild. Like anyone that's working with me and is happy working with me is not going to work with James, and anyone that's working with James and is happy working with James is not coming to work with me.
Exactly.
The realtors aren't the ones that save money in these transactions. It's the clients, right? And the realtors are pushing their clients to us, not because they're saving $36 a month versus James, because they're comfortable with us, they know what we do, and they trust our process. The same thing with James. So like, I don't fight for that business. And it's not to say that we can't do anything cheaper than the next person. You send me a loan estimate and I'll beat it by $14. But like I ran my credit the other day to purchase another home, and shout out to my processor who forgot to take my phone number off of the application. But I've been getting 96 phone calls a day from all over the country. And it's like, what rate are you being offered? I'll beat it. 6 minutes of your time will like. That's not, you're not providing service, you're not providing value, you're not walking people through the process. You're asking for a loan estimate, and you're offering to cut down by $20. So I think it's important to be competitive, and it's important to always start where you're comfortable finishing. But I will never subscribe to the whole send me what James is doing and I'll beat it. So, Kevin charges 2%. I got a realtor that'll charge you 1.5%. Like that's.
So let me ask you from a consumer point of view. This may be a little bit of a tough question because it's on the spot, but buyers are shopping, right? And they're shopping aggressively. They're shopping with multiple agents at times, because I see it all the time. It's like, oh, yeah, I'm working with anybody who gives me the deal. Or they're shop lenders and stuff. What separates lenders apart? You know what I mean? Like, why would somebody shop around? I understand, like, with a Chase, where it's a little bit more.
Yep.
You know what I mean?
Yeah.
And then they're shopping other people around. Let's just say for you guys, what do you guys do to basically set yourself apart from that?
Well, so, I mean, what we do and what we tell our clients is, like, you could go online right now and you could check the average prime offer rate, right? So you can see what's being offered to someone with 800 credit and 20% down across the country, right? What you don't see is that Chase has such a well-known name that they'll charge you 2.5 points on an initial loan estimate, and they'll just tell you that that's the fee. That's what people are paying right now in points, and they don't question it for Chase that they do it, like they will with Bank of America. Everything is so, like, what rate are you being offered? Is it locked? When it expires, like, I know banks that'll lock loans for 15 days to rates that don't exist because they know the loan won't close in 15 days. and then the lock expires, but the appraisal is ordered, and the client has no choice. And at that point, it's just hey, what do you want me to do? Like, so we've built a name with our clients and with our realtors that what we tell you is going to happen. And if you want to shop us around and you want to work with someone that might be able to save you a little money, like, we are by no means anywhere close to the most expensive bank, but we're definitely not as cheap as Teachers Federal Credit Union or Bethpage Federal. Those are nonprofit organizations.
Right.
And when a realtor sees a loan or a pre-approval from a credit union, they're praying that there's something else on the table that they can gear towards. So we kind of, we go over the value with the realtors, and then we kind of hope and expect the realtors that work with us to explain it to their clients. We're like, you're buying a house in a competitive market with above ask offers with 3.5% down on an FHA loan. And if we shop with this approval from California, no one's ever going to accept your offer. Call Cardinal, let Sal talk to you, or let someone talk to you, or call James and let them walk you through the process and explain to you what C of O's are and why you don't need them, or what violations are and how they affect you, or your title bills. And like, we know things that these places don't know, and that's, I think, how we stand out amongst the cheapest of the cheap, or the people that will say, send us a loan estimate and we'll beat it.
And on top of that too, like, one thing that a lot of people don't know is, like, big banks, they don't, like, each individual person who works at that bank is not always licensed. Like, it's under an umbrella of, like, the bank is licensed, but the actual individual who's running the application for you may have no idea what they're even talking about.
I see that with a lot of unions, though. Like, a lot of credit unions, they're not licensed.
They're depository.
Right.
So when you're a depository bank, the bank itself is licensed, and everyone underneath it is under an umbrella. So you can literally go from, floor mopper to loan officer with no testing or anything, under the assumption that there's somebody above you that can figure it out. But by the time you get to that person, the deal's dead.
Makes it a lot tougher to work with those kinds of banks for those reasons. But one thing I wanted to ask you, Sal, is, like, throughout your progression, a lot of people obviously see, how successful you are in the industry. How did you get there so quickly? Like, how did you get to the position that you're in now from 2016 so quickly? And, like, how are you so successful in what you do right now? What got you there?
I mean, I have to, when I got to the point where I started hiring operations, I definitely have to give credit to Frank, because my argument with Frank was always like, I don't want to hire anybody. I want to keep all my own, keep my money. I'll do everything. I'll work until 2 o'clock in the morning. I'll fill everything out. I'll do whatever. And then his motto, or whatever you want to call it, idea was, build it and they will come. Right. So, like, if you're not ready to take on an influx of business, you're never going to be able to take on an influx of business. And the way you do business is going to reflect the fact that you're overwhelmed, or that you can't move forward or progress. So for me to be able to, to manage the pipeline that we're managing right now, and the people that we're managing, and come in on a Wednesday at 10 o'clock in the morning and know that by 1 o'clock I won't have anxiety when I look at my phone.
Yeah.
That was definitely, like, something I had to grow into. But upfront due diligence, making sure that you do everything that you can to make sure a deal isn't going to die ahead of time, and just being, like, personable. And I don't get off the phone with somebody as quick as I can. I don't skip over the personal conversations. I try to get to know people and see what it is, because when someone's putting down 20% and they only have 21%, and you sit on the phone and explain to them that it would make more sense for them to put down 15% and keep some money set aside for a nest egg in case they need to do repairs to the home. Maybe they discount the rate by a point so that their payment's still cheaper. But, this is all the money you guys have. Why are you going to go out on the balls of your feet? You're moving into a home. And now they get together at night and they're like, oh, well, this is so much better. We're going to have 30,000. Like, that kind of stuff will prevent people from ever leaving you, questioning you, or trying to work with somebody else.
Yeah, because you're providing value.
Yeah. And for every one client that you hold on to, it's one more referral that you have to look forward to down the road.
Right. I think that, like, having the conversation up front and just setting expectations and setting goals, and just, saying, all right, I want to buy a house in 3 months from now. The client says, I want to buy a house 3 months from now. Setting a plan for them in place in that situation is so important. And what you're talking about too, setting the money aside, making sure that everything's set in place. So by the time they find the house, get that offer accepted, move in, there's no questions asked. We do all the work up front, and then from there you're good to go.
And that's a problem that a lot of people have, because it is very hard to do all the work up front, especially if you're by yourself or if you don't have support. Like, we underwrite loans ahead of time, and I know you guys have a process. Like, Like, we will take all of your documents, everything you have, submit it to underwriting, and get an upfront commitment. And that basically makes me feel confident enough to call the borrower back and say, hey, I've never even seen your documents. I sent them to Joe, who works for me, and he's been here for 3 months and doesn't even know his ass from his elbow. But he submitted it to underwriting. The underwriters reviewed it. You're good to go. Yeah. And I could do that 15, 20 times a week without having to look at any documents. So my job becomes making the customer feel comfortable and being the face of it, and then putting operations in place so that you don't let the hard stuff slip through the cracks or the stuff that is hard to get to.
Right.
Yeah.
That's awesome. So what have you done in the past, I would say, 2 years after like the COVID market refi, because before 2021, you were big on refis, if I'm not mistaken, right? Or no?
Yeah, so when I first started working at United, I don't know how much you remember about our team because I was new there at the time also, but we didn't do purchases.
Gotcha.
Like, we used to transfer purchases to other people as like a joke.
Oh,
like,
really?
Oh yeah, let me get you to our purchase specialist and like send him to Pete. And Pete would answer the phone and be like, oh my God, this guy wants to buy a house in 3 months. Like, I got 4 streamlines in the pipeline right now. Like, so these guys were doing, I was sitting around killers, like $4 or $5 million a month in refis and streamlines. These guys were leaving at 4 o'clock in the afternoon.
I remember here because your team sat one like aisle over, one row over
in the
from
middle.
me.
Yep.
So I was literally just like on the side, like hearing everyone on the phones nonstop, and nice. I was just like, all right, this is great. So I don't feel alone. Like, I'm just like grinding on the phone too. I was like one of the only people in the aisle, like right next to your big ass team.
I remember
was
you
just
were back towards the left, like if you walked in. Yeah. And we did only refis, and I remember the night of the election, everything pointed to Hillary, but Trump ended up winning, and when that shit happens, the rate skyrocketed overnight, right? So I got an email at like 11:45 p.m. and it was like, put on your big boy pants. It's time to sell cash outs. Every single streamline in the pipeline is dead, and I was like, shit, I don't have big boy pants. I never bought big boy pants. I was selling streamlines. They were the easiest loans in the world. So that was when I took a step back. I almost quit the business entirely. I went back to cutting hair and I started selling real estate.
And DVDs.
And DVDs. Kept selling DVDs.
Yeah.
But when I started selling real estate, that's when I started doing purchases.
Honestly, like that market, that I regret not, because I've never been a refi based lender. Like, I barely do refinances. Like in my whole career, I've probably done like, I haven't even done that many, right?
Really?
So, like, that's one of my biggest mistakes because I feel like I should have been there when that opportunity was there, but I wasn't. I was only focused on purchase my whole career.
Yep.
And, like, I never really had, like, the clientele to really do it. I wasn't paying for leads. I wasn't getting leads from anybody. All I did was just, like, get it myself, right? So I never went after that. That's, like, one of my biggest regrets in the mortgage industry. I should have been there.
Listen, you never know, though, because if you were focused on refis then,
who knows? I would have been purchase based now.
Yeah. So purchases are good for longevity, but now, I mean, every single purchase that you're doing is going to be a refinance within the next
100%.
Hopefully 6 months to 3 years.
Yeah.
So it's important now that you just stay on top of those people and make sure that when the rates come down, you're the first person to call them.
Exactly.
But refis are, I mean, even cash outs are fun, and rate and terms are fun. Like I've sold cash outs in the past 6 months to people that, if the wrong person would have called them, they would have never done it.
Right.
But for me, if it makes sense, I will explain it to you, and I will almost not allow you to not do it because it's a financially sound thing for you to do. If it doesn't make sense, I won't sell anything that doesn't make sense. But if you have $150,000 in credit cards and a 3.5% interest rate that you're protecting, like it's the most important thing to you, but you're paying $4,800 a month in credit card interest, the second you cash out and pay off that stuff, your payment goes up $1,000. You save $4,000 a month. And if you keep the same payment that you were making, you could pay your whole house off in 11 years. So you do calculations like that, and you explain it to people, and by the time you get off the phone with them, they're like, I can't believe I almost didn't want to do this. And then the rate and terms are all but gone right now, unless someone's getting divorced or whatever the case is. But those are even easier. It's just a matter of, those are market dependent.
Yeah.
Let me ask you a question, because right now we're still in the seller's market. So you guys are both doing a lot of like purchases, pre-approvals, and stuff like that. How you guys standing out in that aspect? Because it's tough. Like, I just went to the office yesterday and they were like, we sent an offer for $50,000 over ask. While we're doing the inspection, somebody sent an offer $25,000 over our offer.
Yours.
No, it wasn't mine. It was somebody else's.
No, over yours.
Over their offer, yeah. So it was $75,000 over ask. So it's like, are you guys, as far as like monthly wise, seeing a lot of deals like getting locked in and pushing forward? Because it's a tough market right now for buyers.
Yeah, we're I got like Johnny's been doing really well. Anthony's been doing well. Teresa's doing well. Joe Maring and Vinny have been crushing it for us.
Shout out Joe. I love that guy.
Maring?
Yeah, I love Joe.
It's hilarious. I love Joe. But dude, I mean, I know, me and James have talked at like multiple other events, and we talk about our volume, and everyone else in the industry throws out these wild numbers that are like literally, you can look them up, like they're just fake. So I hate to like throw it out, but like we're currently managing an active $44 million pipeline. Me as a team, like our team.
That's insane.
Yeah, that's
so
impressive.
we did 15 million last month, or the month before last month. We did 9 million this month, which Frank calls a waterfall because it means I spilled everything into this month. But we're probably gonna close 16 to 20 million this month. But it just becomes routine. Like Charles has been a big help. We were able to close a deal for him that no one else was. The realtors that we work with that send us a deal, like I always reach out to the listing agents. I try to build rapport with them. And then whenever we have a deal that has a submitted offer, we send that out to the team. Anyone that knows that realtor calls them, vouches for it. And then we try to push the deal. And then a lot of times either we'll get the deal or the listing agent will call us and say, like, can your clients come up? Can they do another 10? Can they, because they want our offer. Cardinal's a direct lender. We service everything in-house, so we know what the answers are going to be before we have to submit it to underwriting or send it to whatever bank. And I've kind of just leaned on the process and the people that I work for as like a crutch, so that I don't have to work as hard on the process and just focus on the volume. But we're lucky enough to say that we think we're going to be okay through the winter.
Of course.
But it's definitely a tough market. Like, I can't imagine what it would be like if this was 2021 or 22 or 20, because we weren't as busy in 21 as we are now.
It's gonna be interesting though. Once the rates do come down, it's gonna be
it's gonna
explode.
See, like, everyone who's been doing business have like I feel like the biggest months of their career. Like in the months that like it really gets down there.
The retirement months. Like you could literally set up a retirement account in 6 months to a year if you do it right. But I'm literally nervous for it because I wouldn't be able to handle it right now.
Yeah, that's exactly what I'm thinking.
What do you mean?
Like, we're doing we have a $44 million pipeline. That means loans that are anticipated to close or going to close within the next month or two, 3 months maybe. And maybe 5% of them are purchases. Are refinances. So you have to assume that every single person that I've done a loan for in the past year will refinance if the rates get to 5%. And not only will they refinance, but they'll refinance with us because we service the loan. So we can waive fees that other banks can't. So done 290, 320 loans in the past year and a half. I got to add those loans to the pipeline that we have now. And I can barely handle what we're handling now. So then you get into hiring people that don't know what they're doing because you don't have enough hands and trying to train them while bringing in business. I'll handle it. I'll work 29 hours a day. I'm not afraid of that. But I wouldn't mind if it took another few months at least.
You speaking right now is just raising my anxiety levels. Like, I'm nervous. But
it's a good problem to have.
It's a good problem to have. But
all right, so stop complaining, man up.
No, I didn't say I'm complaining. I'm nervous.
We're happy about it, but
you gotta delegate in order to elevate. You gotta hire more people. You gotta prepare because it's gonna happen, regardless of not. It's gonna happen. The rates are eventually gonna come down, and everybody's gonna want to refi.
So here's the problem: do you hire people now, or do you hire people in a year? Because you have no idea when the rates are gonna get better.
That's true.
So if I hire hire 2 or 3 people now for $60,000 a year, does that end up costing me $200,000 before the rates go down? And do I even have that to give them? Because I don't. So it's like it's
yeah.
You end up in a position where you want to stay ready, but you can't overhire. And you also, I've never let anybody go. I keep everyone that I have, so I want to make sure that whoever I do hire isn't subject to my bullshit or to or to the market or anything. Like if I have you, I'm keeping you. That's it.
Let me ask you a question because you were a barber, right? And every time I go to the barber, I'm like the go-to guy that they ask real estate questions to. Mm-hmm. Like I'm sitting in the back with my barber and they're like, "Yo, Kev, can I ask you a question?" And then they just come and ask me a question. What I see in that field though is that they don't claim the money that they're making, right? Like as far as taxes, they're like, "Oh, well, I only claim, let's just say 20,000, right?" Yeah. It's like, bro, that's not enough for you to purchase a house. Like, what advice can you give them, barbers now? As far as somebody who's looking to buy a house, get pre-approved and go through the motions.
That's a good question.
You were in that field.
Well, you can't give advice or coach, but you could talk about an ideal situation. Like,
this is not financial advice, right?
I did a loan for that happened to be a barber. So, Freddie Mac allows you to use 1 year's worth of tax returns as long as you've been in business for 5 years. So most barbers that are ready to buy a house have been in business for 5 years, so they can use 1 year's worth of tax returns.
But in that 1 year, they have to make, what's the minimum that they have to make?
They have to claim what they're making because these guys are making the money. So if they wrote everything off the year before, or they purchased equipment that they're not purchasing this year, whatever they're doing, the money has to be shown in the year that you're looking to purchase a home. And there's nothing that says you can't write off things that that you don't. There's nothing that says that you have to write off everything that you purchase. It's just some of these guys are writing off things that they purchase for their personal life in their business. That has to stop. So if that stops and they claim the money that they made, you can essentially go on extension until October and file your tax returns mid-contract.
What's the minimum that you have to make for that 1 year? Like,
it's impossible.
That's a subjective
to say.
question. Yeah, you got to find out what the house price that you want even is.
Basically, they got to get a girlfriend.
You got to add a cosigner, or you got to reach out to a professional like me and Sal before, while you're in the process of searching. That's what you have to do, realistically. And talk to us as early as possible. That's what you got to do.
I mean, I showed $70,000 when I bought my house
as a barber.
As a barber, I paid $260 for my house, and
damn, when was this?
This was in 2016.
Oh, okay.
And it was a short sale, but what I'm saying is, $70,000 wouldn't get me a sandwich now.
No,
because the mortgage payment on that house would be $6,000 instead of $2,500. So it's all needs to be researched and done up front, and then they have to decide how much they want to spend on a house.
Well, also one interesting thing that ties into this too is whenever you have borrowers right now who make $50,000-$60,000 a year who can't qualify to buy a house themselves, a lot of times adding a cosigner they're scared of. But what percent of applications now have two cosigners? It's a super high number right now.
It's a lot.
I would say more than half. I think easily more than half. I can comfortably say that have more than one borrower on it.
It's way more than half.
And
in New York, it's got to be close to 80%. But I mean, it's scary when you think about it. I make $60,000 a year, which is maybe $5,000 a month. They're taking home $3,800, and the mortgage payment's $4,200. So they have their uncle in California co-sign for them. But is that guy really paying the mortgage with you?
Yeah.
Because you don't even make enough money to pay the mortgage. So your uncle, who didn't even know you were buying a house, is now co-signing for you to buy a house, but he's not really paying for it. And how are you paying for it? So you got to be careful with stuff like that too. These people, they think, oh, well, if I can't qualify, I'll get a co-signer. But the underlying issue is the fact that you actually don't make enough money to pay for this house.
Yeah, you don't want to be house broke. But 90% of the houses I see on Long Island have an apartment.
And that's becoming more and more common. It has.
You have to. I mean, living has gone up so much that you need that rental income.
Remember, we're on camera, Kevin. But in terms of the situation like that you were just talking about, I had a situation like this yesterday where somebody had a cosigner in a different state, and they were trying kind of talking to a bank. They had pre-approval letter. They didn't even send any docs in. They wanted to make an offer in for $550. Until they found out, I was walking them through everything, and I was like, so your income is this. The mortgage payment, I just want to know, from your understanding, what do you believe the mortgage payment's going to be? I always ask them first, because I just want to know, right? And she was saying, around $2,500, $3,000, that's what I can afford. I was like, your possible mortgage payment with taxes is basically about double that, most likely. So I just want you to be aware of this before you buy the house. I was like, is this something you still want to do? And she was like, of course. And I was like, all right, well, what do you want me to do? I can only do what I can do. You know what I mean? If I say no to them, somebody else is going to say it. It doesn't matter at that point. You know what I mean? Then the ethics come into play, but I'm just like, listen, this is what the guidelines are. This is what you're able to do. You came to me with this information, and you said you're going to do this, so that's what we have to do. I don't have a choice.
Right, and for the most part, people will figure it out. When it's the home that they're living in, it's either that or they're going to pay rent. If they have an apartment in the house, or if they move somebody else in with them, usually, the foreclosure rate it's very, very small compared to any other time in history.
Because there's so much equity.
Yeah, the equity's there, right? The people can back out, the people can sell. So normally they'll figure it out, but I would go as far as to say a lot of people are spending more money than they think they're spending.
100%. Yeah, I see it all the time. Even credit card debt right now is at like an all-time high, right? Like, isn't it over like $1 trillion or something right now?
Yeah.
Like, people are spending more money than they know what to do with right now.
Well, I'm going to say this. The cost of living has definitely gone up, but there's a lot of people walking around that can qualify for purchasing a house, but they don't even know. Like, I'll give you an example. Like, when I bought my first house, bro, I was getting denied for every credit card. I'm talking about like $3,000, $4,000, everything.
For a house.
And then they were like, yo, why don't you just apply for a mortgage? I'm like, why? I'm getting denied for everything. So they're like, just send your docs. I sent in the docs. They gave me almost like $500,000. I was like, what? How is this possible? I was getting denied for everything.
But it's because of the security. So the mortgage is secured by a house. The credit card is secured by nothing. So if you have no history, they just assume that you're a 50-50 shot.
And I was just so mind blown. But again, back to your situation, I was just like, I don't know how I'm going to do this, but I'm going to make it happen.
Make it happen.
Yeah, I'm going to make it happen. Yeah, that's just. Yeah. But that's just like that New York hustle, that New York mindset. Like, I'm going to make it happen by any means.
Yeah. And that's why we have $5,000 mortgage payments. Everyone feels like that. So think about this. The FHA allows you to go up to almost 60% of your gross income. So if you're a W-2 employee, you make $100,000 a year, you're probably taking home 70, give or take, and you could spend 60 of that on your mortgage and your bills. And that doesn't include your utility bills, your gas, your food, your travel, your expenses. So Netflix, which is always the one that puts me over the top. But seriously, that's people are spending more money than they have, and that's where the $1 trillion credit card debt comes in.
So I have a house right now. I'm not going to say where, but
tell us. What's your address? Yeah.
I'm not going to say the address. But the house has an apartment. It's like next to it, right? Mm-hmm. If somebody buys a house, that mortgage is like just on average, probably be like close to like $5,000 or so, right? Mm-hmm. But that apartment, you could rent it out for like $2,400-$2,300, where that's paying like close to 50% of the mortgage. It's like, all right, I'm going to do it.
And it's paying for it net, which a lot of people don't realize too. Like, you're 1099, but for someone that's on a W-2, for them to make $2,500, they really got to make $4,000 or $3,500 or $3,600. So you're collecting $2,500 in rental income is really your $4,000 a month, which ends up being $50,000 a year. So you make $100,000 a year, now you make $150,000, and that other $50,000 is paying for your mortgage. That's a big, like, every single house that I have has rental income in it, additional rental income. The first house I bought had 3 kitchens in it. I was living for free. I was collecting an extra $1,000 a month. I was living in a closet. I was renting out every single room. But I started.
So what are your goals for, the next couple of years? Are you looking to expand your business personally, or are you looking to expand out your team?
Both. My team is still like relatively small. I try to, like Johnny's got 9 loans in the pipeline.
You consider your team small? I don't think your team's small at all.
Of loan officers. I mean, I think I got like 6 licensed loan officers. And then we're like 14 people.
Yeah, I don't think that's small at all. I think that's a pretty big team.
It's a humble flex.
I've tried not to I've learned my lesson, right? I used to hire anybody with a license. You're taking the test on Wednesday, you'll probably pass it, come on in. But like the amount of time and energy that needs to be invested into new people, if they're not willing to invest, I would say double or triple that amount of time and energy, it's like, I never got into the business and asked Frank to sit down with me for 11 hours straight and fill out an application for me. Like, I did my research and my work, and then I leaned on the support to help grow. So anybody that doesn't want to operate the way that I operated when I got in, I can't take on anymore. I've tried to, and it doesn't work. We'll take loan officers, and we'll look for people that are relatively self-sufficient and want to grow from $1 million a month or $2 million a month. But I've hung up the Mother Teresa hat. I can't do it anymore.
I feel that. Now that I'm starting to grow out, like trying to start my team and grow out my team, I see what you're talking about, because I'm like relatively new to this right now. So it's like I'm seeing everything, and I've literally asked you questions about this too.
I warned you that night. Yeah, I was drunk, but I told you. I was drunk, but I told you.
So I remember like hearing those things, and
stay by yourself. Don't hire anybody.
I remember that. That was funny, but I see that now. Like, I see what you're talking about. Like, I see it now. So
yeah, and it's just and then you always run the risk of, like I feel like an overwhelming sense of loyalty from my guys, and I would never see it. But it's like, if somebody went to Anthony tomorrow and offered him $200,000 to switch banks, like, I would do it if I was him. And so you have to always stay one step ahead of whatever anybody else is willing to give somebody, but you've already given them everything you have.
Yeah.
So it's a tough industry to invest in the beginning and expect payouts in the end. and then and then you're trying to do your own business to float yourself and in your own life. So it's definitely a juggle, but it's it's fun.
Yeah, it's definitely stressful. I'll say that much.
What would you say tip wise to somebody who's looking to get into the mortgage industry? Somebody who's brand spanking new.
Just stay out. I got this under control. No, I'm just kidding. Honestly, I talk to people all the time. It's like, this isn't like, you're not like a data processor. Like, your friend's a data processor and makes $60,000 a year, and you sit next to him and now you make $60,000 a year. Like, there's a lot that goes into it, and some of it is literally just luck and the person that you are and whether people want to work with you or not. Some of it is how good you are with numbers and how much that, some people hate numbers.
Yeah.
If you hate numbers, do not get into this industry. It could be done. I know people, I work with people that hate numbers. It could be done, but it's just not going to be something that that you don't dread every morning. Like, I don't, I look at these things like problems that I get to solve. Like, it's not that it's fun, but I don't hate going to work.
Yeah.
So my tip would be to make sure that it's something that you actually want to do and not something that you're doing because it looks like, it's fun because we make it look fun. Because we go to parties every night or we hang out and we network and whatever. Like, if I got to get drunk 6 nights a week for business, I'm going to do that.
Yeah.
But if the business is there because I want to be in the business, not because I'm dragging my feet because I think there's something at the end of the tunnel that really isn't there.
So we need to have a discussion, an intervention. 6 nights a week. 6 nights a week, it's a little extensive.
No.
Well, that's awesome. All right, so Sal, anything you want to leave us off with? Anything you want to tell all the lovely viewers?
I don't know. I appreciate you guys having me here. This was definitely the best podcast I could have hoped to be on, especially for my second podcast. I would have never even been on my first one if Charles didn't force me to. So we're setting up our room on, we had it on the inside of the office. We're moving it to Main Street so that we have the street and the all the offices and stuff in the backdrop, and then I'll have you guys on there first if you guys want to be there.
Yeah, we'd love to. We'd love to be there. But,
sorry for making.
I'm a little sensitive. Don't prank me the way we pranked you. I know you could have taken it.
He cannot take a prank. He's very, very sensitive.
Ready for the ultimate prank? My man had his phone up mad loud. I heard the whole thing. I just was trying to play along.
Come on, Mike. What the heck?
I mean, damn, bro.
But to be honest, there was no, because even if I would have said like, oh, I know what's going on here, it still would have seemed pretty. It still would have played in with the prank.
Yeah, that's what he said.
But I felt like I felt horrible, like, because I was like, I love Sal, but like, I know he's going.
All right, to be fair, it was his idea. I'm like, all right, I'm just gonna go.
I was like, we gotta do it to Sal, because I know you're cool. You're gonna be okay with it. Somebody else, if we didn't know him that well, like, it would be so awkward, like, the whole time.
No, but I'm all for the jokes. If you haven't seen already,
I'll prank you again sometime. Next time I see you. Well, hopefully. If
I don't do it first.
Yeah. All right. Well, that was the latest episode of Real Estate and Chill podcast. Sal,
where can people reach you? Yeah.
Don't. No, I'm just kidding. My Instagram and my cell phone number, and it's all over my social media. But I would say if anybody wants to reach me this week, do it through my GoFundMe page and donate some money and stop being cheap because we're trying to raise money for the kids.
I'll be on the GoFundMe. Don't worry. I got you. What's your Instagram?
Sal Rizzolo.
Sal Rizzolo.
So first name, last name, all lowercase, if that makes a difference.
Perfect.
Nice and simple.
All right. We love it. Sal, thank you again for coming on the show.
Thank you.
That was the latest episode of the Real Estate and Chill podcast. We will see you next time.
Thank you for tuning in to the Real Estate and Chill podcast with James Chaudhry and Kevin Iglesias. Don't forget to like, comment, and subscribe. Also, share this with your friends, your enemies, your mother-in-law. No, seriously, this podcast is so fucking good, you might want to tell your ex. See you next time.